Well, it turns out it was a scam after all. What's up, guys? I'm nobody special, and 8 days ago, I did this video about this bank, Heartland Tri-State Bank, which failed last Friday after market close. And in that video, I said that this story just did not make sense, that this was not another bank failure like Silicon Valley or Signature Bank or Silvergate Bank or First Republic Bank or PacWest Bank or Credit Suisse. My goodness, there was a lot of banks that failed recently, but this one felt very different. And in that video, I dug into the balance sheet of the bank, and I said, look, guys, the numbers just don't add up here. The losses are too big. Even if everybody at this bank stopped paying their loans, it still wouldn't have cost them this much money. It wasn't losses from U.S. Treasuries that took down this bank. They don't own enough U.S. Treasuries. There's got to be some kind of crime or fraud involved here. Well, it turns out that is exactly what happened, and this is a case study in why you actually have to pull the reports. You've got to pull the balance sheets, pull the earnings reports from these companies, and actually look under the hood at the numbers. If you just read the headlines that the financial press gives you, you never get the whole story. And last week, the financial press wanted to take Heartland Tri-State Bank and say, look, the banking crisis from March has finally reached farm America. It's finally reached flyover country, middle America. Oh, this poor little rural bank has finally gone down from what took out the big bank in Silicon Valley. But that was not what happened. Now, I couldn't prove it at the time, but I said in that video that this doesn't add up, that the numbers don't make sense, and that there was some kind of crime here. It turns out that is exactly what happened. And here you go in the Financial Times. Don't worry, it was just a scam. You got trouble, big trouble, right here in Elkhart, Kansas. It isn't often that an official says with apparent relief that a bank in their remit closed because it was scammed. Here's what Alphaville was told by Kansas State Bank Commissioner David Herndon when we called about the closure of Heartland Tri-State Bank. We declared the bank insolvent because of a scam that they fell victim to. I can't speak to the particulars of that. Investigations are ongoing, but it had nothing to do with interest rate increases, nothing to do with balance sheet asset quality, nothing to do with the Fed. In other words, David Herndon, the Kansas State Bank Commissioner, is saying exactly what I told you in that video 8 days ago, that the failure of Heartland Tri-State Bank in Kansas was not a continuation of the banking crisis from March, that there was some kind of fraud or crime involved, and that is exactly what ended up happening. Heartland Tri-State Bank was a very small institution with just $139 million in assets. It was purchased by Dream First Bank, a bank with $511 million in assets based in Syracuse, Kansas, and formerly known as First National Bank of Syracuse. But notably, the closure cost the FDIC's Deposit Insurance Fund $54 million, eclipsing the size of its entire $48 million loan book. And that was one of the things I said in my video, guys. It just doesn't make sense. Even if every single customer at this bank stopped paying their loans and had no assets to be seized in default, it still wouldn't have added up to the amount of the losses from this bank. And I said the same thing about their assets for sale and their U.S. Treasuries, that it just was totally different than what was going on at the other banks that failed this year. And all the financial press was so busy telling you that this is just a continuation of the crisis. Oh my God, another bank has failed. It's finally reached middle America. That is not what happened. You cannot bank on the financial press telling you the truth with a headline. Heartland's small size may be why some news outlets didn't look too closely, even though nobody special did, and instead settled incredibly quickly on a banking crisis continues angle for its closure. It was lazy reporting from the financial press. While Heartland was indeed the first bank in nearly 3 months to fail, it is difficult to find much or really any similarity between it and SVB, Signature, First Republic, or even Silvergate. And then this article goes on to list pretty much exactly what I told you in my video last weekend, that this bank failure does not make sense. There must be some fraud or some crime involved here. Turns out that is exactly what happened. So long story short, guys, the failure of that little bank in Kansas last weekend, Heartland Tri-State Bank, it was not a continuation of the banking crisis that started with Silicon Valley Bank back in March. Now, to be sure, I think we will see more bank failures, especially small bank failures that are similar to what happened at Silicon Valley and Signature Bank. But it was just too easy for the mainstream press to take this story and just tack it onto the crisis from March. Nobody actually looked under the hood. Nobody except nobody special, that is. You got to pull the reports. You have to look at the numbers. The truth is in the math. You just have to bother to look. And that is why Nobody Special spends so much time staring at charts, looking at balance sheets, reading earnings reports so you don't have to, and so you don't have to rely on the mainstream financial press and their lazy reporting and their clickbaity headlines to tell you the truth. You can get it right here. And until next time, live small and dream big.